Well, hello and welcome to another Arizona real estate market update. We're getting towards the latter part of February here. So we got 6 or 8 weeks behind us. Let's see what's happening in 2023 since the new year started. So these are the things we're going to go through. Greater Phoenix is generally back in a seller market. I've been talking about that since October or November of last year. We sort of hit a bottom in prices, and we'll go through some numbers that demonstrate this. Other cities have moved up strongly also. And the spring buyer season is upon us. But wait, as the whole advertisement goes, inventory has not expanded yet. We still have people holding off from selling their homes for whatever reason, leading to more aggressive offers. You know, we went through a period late last year where seller concessions was the rule. Now in many areas, we're getting multiple bids and offers above the asking price. So we'll go through those numbers. I've had this stop waiting statement on my slides for a couple of months here. If you're waiting for a 2008 foreclosure event to happen before you buy, I don't believe it's going to happen, at least not in the foreseeable future. I did a video on this very topic about a week ago. So if you can find that on my channel. And contract ratio is evidence of a strengthening market, and we'll go through some of those charts. And these are the numbers that I started looking or talking about in October, November of last year. So please subscribe, like this channel, subscribe so you get updates that I've posted another useful video. And let's get right into it. So 2023, this guy looks a little lost. So where are we now? Let's look at some headlines. These are from the New York Post and Goldman Sachs, right? So one of the things that they said, these accumulated in January, sharpest declines in the U.S. housing market are now behind us. Goldman analysts Ronnie Walker and Vinay Viswanathan said in a client release on Monday. I think that's true. I think most of the price declines are behind us. If we enter into a recession and interest rates drop, I think you're going to see this market take off. These are the ones that were kind of wrong. Overheated housing markets, larger declines, that's kind of wrong. Overheated housing markets, peak to trough declines of over 25%. A little bit wrong. These declines would be on par from the collapse experienced during the 2008 housing crash. I don't think that's going to happen. We certainly have challenges, but I don't think a 2008 housing crash is in the works, at least based on what we see today. So let's follow this up with the market cycle. So I started talking about a market bottom back in November, December. If you go back and look at some of these market updates that I do, you can clearly see, and we'll go through some more numbers in the following charts that sort of show this again. So I think we're here. I think people are skeptical that prices are going to go up, but prices are going up. And you're going to start seeing those in the numbers, because what happens is, in many real estate numbers, what you see in the current numbers is what happened, 2 or 3 months ago. When you enter into a contract, that closing doesn't result until 2 or 3 months down the road, and then it appears in the numbers. So as we go forward here, I think you're going to start seeing some price increases, certainly some leveling off, even in the current outlying areas that are still in a buyer's market. So that's where I think we are. And let's take a look at the contract ratio. So here's the most recent number, and you can see it jumped up sharply to 56.7 and compared it was the same level back in July of last year when it was a little bit higher at 58.3. So you can see this ramping up here. And this is the October, November bottom that I've talked about several times. And you can see that just as soon as January started, spring activity in Arizona usually accelerates into the summer, late summer, early fall, and then tapers off towards the end of the year. So you're seeing that, and we've talked about it several times on this channel. So the numbers are starting to show an increase in activity, which typically leads to an increase in prices, especially if inventory doesn't go on the market, which is what we've been experiencing. So let's take a look at the Cromford Market Index, and we'll get some more charts that'll summarize this. This yellow line here is 2022, and you can see we had this little sort of 4-week buyer market. If you were in the market to buy a house, gosh, that was the time to buy it, right before the holidays. The problem was there wasn't many properties on the market. So since then, the situation has not changed much. There's still a dearth of sellers, but buyers are coming back into the market because they're starting to recognize this is an accelerating market. So there's the end of 2022, and then 2023. You know, we've had 1, 2, 3, 4, 5, 6 weeks of increasing numbers. So, of course, we're way above 2021 and 2022. That was not a good time for anybody, unless you were a seller, of course. But if this follows 2015, which I think the numbers are likely to follow 2015, then you're sort of talking about a gradual increase, like I say, through midsummer, early fall, and then it sort of tapers off for the holiday season. So that's a quick summary of where I think we are. Let's take a look at the contract ratio. And I've got two charts here. This is the situation late last year. I'm gonna just jump forward one chart, and then this is today. So look at the colors here and look at the colors here. So this quite clearly shows that there's not much buying pressure towards the end of December 31. Most of the outlying areas are blue. You got some smattering of some warm areas, you know, closer in, but that's what it looked like at the end of last year. Now, let's jump forward to February 11th. Now, this is really a big change. Look at how that picture has changed, right? So the browns and the tans are now more buyer's market. So you're seeing the outlying areas, Fountain Hills and up in the mountains, where you can buy some beautiful properties up there if you're interested in a second home or a weekend getaway. And then on the northwest is a little bit cooler. But in town, gosh, it's starting to heat up crazily. This is up here where they're putting the new Taiwan semiconductor plant in. That area is just going bonkers. And of course, Chandler, which is always a popular spot. Let's take a look at the Cromford Market Index as it goes to, this is a view of towns. Excuse me. So you can see these are all seller markets. These are, you know, sort of closer to inside, Fountain Hills, Chandler, Paradise Valley. But just look at these numbers and how they've changed over the last month. Up 25%. These are not prices, these are activity. So anything in this column here, Cromford Index, anything greater than 100 is typically a seller's market. Lower than 100, typically a buyer's market. So you can see the balanced market as of this update is purely in surprise. And buyer markets and stronger buyer markets still in the outlying areas. Goodyear, Queen Creek, Maricopa, and Buckeye, they're pretty much removed from the Phoenix metro area. And they're still in buyer's markets, good deals to be had there. But the interior cities, they just have moved into a seller's market, much stronger than they were in the October-November timeframe. Let's take a look at mortgage rates. So, my goodness, we had a big shock last week when the inflation numbers came in hotter than they were. So we were getting down here to the low sixes and then jumped up to the high sixes again. So this would have been a good time to lock in. I actually have an interview coming up with Lender Insights, a big lender in the Valley, and he's going to provide a video on where he thinks interest rates is going to be. But this was sort of a shock to everybody, put a lot of dampers if you hadn't locked in the rates, but it has not changed the overall pressure for buyers to buy properties in the Phoenix metro area. I've shown this chart a number of times. This is the latest read on the inflation, 6.4%, which was higher than expected. And the way this works is, you know, Jerome Powell wants 2% year over year. So the way this chart works, you have to go back 12 months and compare this back to the number that was present then, and to see if he's going to meet his 2% goal. So as we move forward here, as long as these rates don't get, you know, don't accelerate out of control, we're going to start comparing to the higher numbers about April, May, June timeframe. So if these numbers sort of stay at this level, I think by June or July, you might see some easing. And I'm not predicting now, but the pressure might be off to increase rates. They might stabilize. And certainly if a recession comes around, you would see interest rates fall. So that's sort of my projection. I'm still anticipating June, July, maybe for some interest rate easing. You know, talk to a lender, get lined up and get ready to lock in. You can always refinance later when rates come down. What you want to do is marry the price, but date the rate. You know, over the time that I've owned my house, I think I refinanced 2 or 3 times. I think I started at 8%, I refinanced at 5%, and then at like 2 and 7/8 or something ridiculous like that. That was sort of way back earlier than 2021. So that's sort of where we stand on interest rates. Let's look at the employment report. Now, this is very key and very interesting. This is Arizona versus the U.S. labor force year over year percentage change. And of course, this is seasonally adjusted. So the orange line is 1.6% change. But look at Arizona. We jumped up 2.8% over last year. We had this sort of big drop down here in 2020, which was the COVID dilemma. But since then, we took a little drop, and now we're right back year over year to 2% higher than where we were in December 2021, which is this spot here. So, you know, I've done a couple of slides on the economic conditions in Arizona. You can find them on my channel. But let's just take a look at this. This is a quick summary. You know, when I moved here in 1996, I think we had 3 industries, right? There was retail, construction, and travel. Those were the only industries that were here. So the Phoenix and Arizona area was very subjective to economic woes. We did not have a diversified workforce at all. But look what's happened over the years. These are sort of, we don't have any real major industries that can hurt us singularly in the future. We have a broad base of jobs. Education and health services is big. Leisure and hospitality is certainly high in Arizona. Everybody wants to come here for a winter. You know, that's why I moved here. I didn't like, 100 inches, 167 inches of snow a year. So if you're looking for warm weather during the winter, take a visit here. Manufacturing, we gained 14,000 jobs. Trade, transportation, utilities, 6,300. I mean, we just put jobs in all over the place. The only one that losses were recorded is information. That's the IT sector, and we lost 100 jobs. Now, I'm sure there's some errors in counting there, so maybe that was flat. Who knows? But this is sort of where we are on jobs. Arizona is not suffering for jobs in general. So that's the story on the employment in the Arizona area as of January 19th. Let's see. This is a chart. And I sort of threw this in because a lot of people ask me what's going on with these iBuyers and big Wall Street firms. I had done a video on Wall Street buying. And really what you want to see in a healthy market is owner-occupier owning their own homes. And see, we were back here in 2020, 83% of the activity was for owner-occupied. And then they were sort of pushed out of the way by iBuyers, Wall Street firms, and the like. And the iBuyers, I could do a whole video on iBuyers. Now, iBuyers are like Zillow, Open Door, and those other, let's call them companies that come in and think they're going to make $1 million on every house they buy. They've lost a lot of money. Their activities is way down. Zillow got out of the market about a year ago. So you can see on this chart, iBuyers and investors have taken sort of a backseat to owner-occupied, which is a very good indication of the firmness of prices and the stability of prices going forward. This is the Crawford Market Index. I got a summary chart that shows this. I showed this a couple of weeks ago because I think it's very interesting. If you look, every time the Crawford Index drops below, the zero line and crosses back up, you tend to have an increase in annual appreciation on prices. It happened back here. It happened here. Didn't cross zero here, but look where we are in the Crawford Index here. Now, I think this is a fairly accurate leading indicator of prices. I'll say again, if interest rates drop, I think you're going to see a frenzy for buyers. So don't wait until the week of that happening. You need to talk to me now, talk to a lender, start getting lined up to buy a home, especially if you're renting, because rentals are not going to go down when prices go up. So that's the Crawford Market Index. Let's take a quick look at the supply and demand curve. We sort of got this mush here, end of October, beginning part of last year, where we're sorting things out, right? Green is indication of a demand, and red is supply. So as supply has dropped, demand has increased, and I'll show you this number again in a little more detail here. So this is sort of the speed dials of the Crawford Index, and is quite useful actually. I look at this just about every day, certainly every week. Anything below 100 is sort of indicates a sea change. This is the supply over here, and this is the demand over here. So you can see our supply has been dropping down, and supply has not come back to the market. So economics 101, if you reduce supply and keep demand the same, the prices generally will increase. Now let's look at the demand over here. Demand has been going up almost consistently for, gosh, 20, 30 weeks. This is the last 30 days, but you can get the general idea. So you subtract one from the other and you come up with this market index trend. 100 is a balanced market, and we were in a balanced market up until January, December, January of this year. Now we've started broaching that buyer's market, and I'm a broken clock. I'll say it again. If interest rates drop, I think this market is going to take off. So that's it for this market market update. Here is a general summary of the market conditions. Unemployment dropped in Maricopa County. Phoenix is back in a seller market. We seem to be tracking 2015. We talked a little bit about that. We see mortgage rate increases that could slow demand and push us back into balance. There's only a handful of buyer markets left, and they're in the outskirts. And I showed you that chart. Spring buyer season is upon us. I talked to a number of people. Yeah, they're going to buy in 5 or 6 months. And I tell them, don't wait. If you don't have your lender lined up, your financing lined up, and your credit in the right shape, you're going to miss out. And that's what happened to a lot of people last year. I got a lot of calls last year when the buying frenzy was going on. They were pushed out. If you were pushed out last year, let's get you re-qualified and start looking for homes. Here's an interesting statistic. Owners, if you bought 2 years ago or longer than 2 years ago, even if you sold today, even if you had to sell today, you're going to close with significant profits. And look at how this goes up. This is why I say you got to get into your home. Don't rent, because you're only paying somebody else's mortgage off. You need to own your own home so you can pay your mortgage off. Look at some of these rates here. If you bought your house 6 years ago, even with the current reduction in prices over the last 6 months, you're still 81% of where you were. That's almost doubling your money in 6 years, and you own your own home. Don't wait, people. I can't stress that enough, especially if you're renting and your rent is high. In many cases, you can get into a house for about the same amount of money. This is what the media is going to focus on, I'm sure. For the next 3 to 5 months at least, year-over-year appreciation rates will be negative because they will be compared to a higher number last year. Don't let them scare you out. 2022 was crazy. We had a huge run-up in prices. They've pulled back, depending on what city you're in, 15%. It's not a crash. I think if interest rates go down, you're going to be surprised at what happens with real estate here in Arizona. So this is a sort of message to Goldman Sachs, right? In order to see another 10% drop in prices going forward, that's what they're predicting, we would need to see rising or above normal inventory. Not seeing that. Inventory is declining or below normal demand. We're not seeing that, especially in the first half of the year in the Arizona area. Rising price reductions, nope. Greater weekly price reductions are absolutely flat. Rising days on market prior to contract. Actually, Phoenix days on market are declining. Buying pressure is increasing. Do not wait until the Federal Reserve announces a recession or a flattening of interest rates or a reduction in interest rates. You will miss the market again, I promise you. So here's a little summary for myself. You can get, if you're looking to sell a house and you want to sell a house by yourself, that's fine. You should get my book, How to Sell Homes Fast for Top Dollar. You can get it on my website. There are online resources all over my website, including videos just like this. You can subscribe to this YouTube channel here, and newsletter subscriptions are here. So that's it. I hope this is useful, and you have a great week, and we will see you soon. Thank you. Bye-bye.